an economist, and so I'm a number cruncher, a crystal ball gazer, not very exciting or entertaining necessarily, but I do want to be informative, if nothing else, to give you a sense of where the Canadian economy is, how it's weathered the economic financial crisis, and what its short-term outlook is as well. In that vein, of course, I need to discuss the U.S. economy. It's our largest trading partner, and that I'll certainly make some comments on that. And I must admit that the last 2 years, I've been an economist now practicing economist for more than 30 years. The last 2 years have been actually the most exciting ever, quite frankly. The most interesting, the most challenging for a forecaster. The events of the past 2 years are really quite unprecedented. Once-in-a-lifetime financial crisis, the worst economic recession since the Great Depression. So these are events that economists really sort of are like a huge laboratory. And really, we did fail. There was one slide there earlier on in the promo that related to the Queen's visit to the LSE. When the Queen, shortly after the financial crisis of the meltdown of Lehman Brothers, she was inaugurating a new building at LSE, and she asked these group of economists, LSE, one of the most prominent, of course, economic learning institutions in the world, if this crisis was so big, how is it that no one saw it coming? Or words to that effect. Well, that's a really good question. And I must admit, the vast majority, if not all economists, did not see it coming. And it's really a major failure of the profession, quite frankly, to miss this, this most significant event. And there are many reasons for it. I won't go through it all, but it's really due to the, obviously the new nature, evolving nature of the financial system, and indeed, when I was looking at numbers and other economists, we could see the slowdown happening. You could see the U.S. economy, the U.S. housing market turning into recession, etc. And you could see that there were going to be problems developed on that front. But to relate it to a financial crisis, the contraction in credit, that was the link that, at least for me, that was really missing. So that aside, let me just go through these materials I have here, and let's begin with more of a global view. This is the most recent information we have on the state of the global economy. We don't have monthly world GDP numbers, but we do have monthly industrial production numbers as produced by the OECD, and these are the sort of track over the past 3.5 years or so, the large contraction in economic output, the subsequent recovery. And Japan is notable here. Japan is a more export-oriented economy, and hence its contraction was one of the most severe. And in fact, when I speak more to Canada, recession was in fact export-driven as well. So here we do see recovery occurring. The rate of increase coming out of the recession is beginning to slow. Certainly technically you can see that in the track path of those numbers. So, and that's very typical when we see a recession occur, contraction of spending, contraction of production. The subsequent rebound tends to be fairly vigorous in general. There are some clouds on the horizon. This is from the OECD as well. These are the leading economic indicators. Economists, we construct such measures to try to give us a sense of where the economy might be going over the next 3 to 6 months, not much longer than that. And here, these are, I'm also showing you China, in this case, as well as the OECD, US, and Europe. And here you can see, in the case of China, growth rates are beginning to tail off. So the high growth rates we saw in China, 10% plus, are beginning to diminish. The Chinese authorities have begun to tighten. They've raised some interest rates. They've begun to tighten the flow of credit, particularly to speculative real estate markets, and also most recently begun to edge up the value of their currency. In the other economies, you can see that the lines are starting to flatten out, and that's a very important technical sign. So it looks like we are beginning to see a slowdown development now. We'll talk further about whether we're going to head into a double-dip recession in the U.S. or not. Here's the path of the U.S. Recession recovery. So the yellow line is actual real GDP quarterly numbers from the 8 quarters or 2 years from the trough of the recession. And I'm estimating the trough was Q2 2009. And so the performance of the U.S. economy, you can see the recession was much deeper than the normal or typical U.S. economic recession recovery. The recession was much deeper, it was much longer, and the recovery since the trough much more weaker. Again, you see the initial growth spurt, but it's now since begun to wane. So the Q2 number that was released most recently was only 1.6% growth rates at an annualized rate. So that's very low and very weak. And typically, you see where the U.S. economy has generally performed somewhere in the 5%, 4% range. Now, this is an average of typical, if you will, based on post-war economic recessions and recoveries. And obviously, this particular recession is much different than any other we've seen. The credit crisis was so severe, and so it's unlike that we'll see the same kind of path. We will see, I think, more moderate growth, certainly below average performance. Just let me quickly turn to Canada. Canada is still an export-oriented economy and resources. This is a measure of the Bank of Canada's sort of export commodity price index, energy, forestry products, mining products. And here, for Canada, the drop in commodity price is very important. And the subsequent upturn, interestingly, has been very modest. And I'm showing you two measures here, one in US dollar terms and the other in Canadian dollar terms. Of course, most international trade is conducted in the currency of the US, and hence that's the most important one. But converting it back for exporters for Canada, that's obviously very important. And here we see the basically flat performance since 2010, all the way up in the recession lows. Look at some of the key sectors for Canadian commodity exporters, energy, again, in Canadian dollar terms, relatively flat. Natural gas prices are at very, very low levels. Metals, minerals, copper, etc., has shown some life. Forestry, lumber, pulp, newsprint, again up. Actually, some weakness most recently. And then agriculture. Wheat prices, of course, really skyrocketed in the last couple of months. That's embedded in here, but there are other agricultural commodities as well. So, from this point of view, I would say that the outlook or the current state for Canadian exports is better, but certainly not particularly robust. And obviously, from the energy side, it's still relatively weak. Here's Canada's economic growth performance from 1980, and we did go through the most severe recession since 1982, but it was relatively mild on average by comparison. The Q2 number that came out most recently did begin to see register some slowdown in the rate of growth. Again, that's normal recession recovery dynamics that's playing out here. And that is typically during a recession, there's a huge cutback in spending, production. On the rebound, we begin to see some pent-up demand by consumers, interest-sensitive sectors pick up, and also manufacturers. Step-up productions, increase inventories, but that tends to wane and fade away, particularly the inventory cycle. So that's going to fade in the U.S., also in Canada, as part of normal recession recovery dynamic going forward. Here's excess capacity in the economy in general. Another point here is that the composition of employment in Canada, full-time, part-time, while full-time employment still remains well below the previous high. Part-time employment is at record highs. So that's what's seemingly much better employment numbers. So we do have considerable excess capacity in the labor market in Canada, and also the U.S. even more so in Southwest. Looking at some debt levels and measures, these are for consumers, persons, and unincorporated businesses. So I'll show you two scales here. On the left-hand side is debt in relation to personal disposable income, and that's about 140%. And it has basically risen unabated. The recession had little impact on consumer debt, unlike in the U.S., the UK, and some other countries where debt levels as a relation to proportion of disposable income are about 170% in the U.S., 160% in the UK, and have since come down quite steadily in the past couple of years. In Canada, was continued to rise, albeit in the second quarter, there was a bit of a dip, you can tell by the red line. Comparing the debt, overall debt, consumer debt, mortgage debt, to net worth and to total assets, there too you can see the upturn that has occurred, but it's still not particularly excessive levels. And that's always a fundamental question when does debt become excessive? One measure is when it becomes difficult to service. These are debt service ratios for consumers, for households, and I'm showing you two measures here. One is mortgage debt, and then the other is consumer debt, credit card, line of credit, that kind of thing. And here, thanks to low interest rates, debt service is quite manageable. The same would apply to the U.S. as well. Now, it's when it comes to the ability to service debt, obviously future interest rates, changes, income levels, all of that plays into the equation. But certainly at the present time, debt services ratios or burden is not particularly high, at least in Canada. And when I look at the U.S. numbers as well, I see a similar story, again, thanks to very low interest rates, albeit at the debt levels, the U.S. consumer household situation is not as healthy as in Canada based on some other measures. Here, let's take a look at the level of arrears and residential mortgages. These are for chartered banks in Canada, not to credit unions, although no doubt there'd be a similar training profile. So it looks like, at least the residential mortgage in Canada, we've seen the highs in arrears. And bear in mind, arrears, bankruptcies, etc., are lagging economic indicators. They tend to rise or change after economic conditions or household finances have changed. And their lag time can be 6 months, 1 year, perhaps even a bit more. So this is a positive sign in the sense that it's beginning to decline. Again, a confirmation that the economic recovery has occurred in Canada, and that consumers, households are in better financial shape. Consumer bankruptcies, here's the path for overall Canada. We did have a run-up during the recession, which is what you want to expect. We had a spike in September 2009 because of a change in the Bankruptcy Act. It's not the official name of the act, but it's called that. And that brought forward some consumers to file in September, and it was a huge drop-off the next month. So the new provisions of the act are actually making it more difficult for consumers to go through the bankruptcy process, hence there was that acceleration of events. When it comes to businesses, this is a couple of measures of their health. Profit margin as a percent of operating revenue, both for financial and non-financial firms in Canada. And here you can see that at least over the past couple of decades, their condition is relatively good. And yes, there was some substantial drop in revenues and profits during the recession, but it's rebounded to some extent, and that's an indication of fairly healthy levels. Another measures of financial condition of our businesses, debt to equity ratios, and those too are well below previous levels and within normal bounds. Include for these measures. Profits are up from the recession lows, and so for the most part, companies are in pretty good shape. Now, there are some considerable industry differences. These are just aggregate numbers for all the companies combined. There are some significant industry differences